Welcome back, everybody. This is Fausto. Welcome to our Cyber Traders, our new podcast. Today we have Vince Vora, very old friend of mine, been around trading. I mean, God, like everybody else, been around as long as I have. And look forward to having him on the show. Vince, it's good to see you again. My God, you haven't changed a bit. You look exactly the same.
It's great to see you, Fausto. Thanks for having me on. Appreciate it.
I'm good. I'm good. Good. Welcome to the
Yeah.
show. Welcome to the show. So, what have you been up to? It's been a while.
Oh, it has. It's been a while, and I actually missed the live events we used to do in the past. I haven't really gotten back to those since the COVID pandemic. But what we've been doing is a lot more coaching these days with our students. So real strong focus there, and trying to keep up with all these changes in the market. And it's there's never a dull moment, obviously, and there's a lot going on right now. That's for sure.
Yeah. You know what? We do a lot of coaching too. And I think a lot of people need to have that one-on-one. It's like, but I mean, I remember going back and doing those big presentations. We've done those big webinars and be at the expos and stuff like that. I mean, obviously things have evolved. So what has basically changed from COVID till now? What you feel like you've been doing?
Well, there's with all these online meetings that we have now, Zoom and like this platform that we're on now, we can be anywhere and meet with our students as often as we like. We meet with our students 3 times a week, actually, for an hour each time. But we've been focusing a lot on all the new technology that's out, everything that traders have access to these days. I mean, when we started, there was none of this stuff.
I know.
And I mean, I'm going to age myself now, but going back, we used to create our charts by hand. I don't know if you remember that. We had our graph
I
paper.
had big charts back then. So
Yeah.
I mean, like I remember, when did you start? What year did you start, you say?
87, believe it or not.
Oh my God, you were back in the crash. I mean, I started back in
That's
95.
exactly when I started. Yeah.
Yeah, 95.
Yeah.
So how did you get started? I guess a lot of the people here, I mean, we have so many great traders that come on the show. And here we are, like we always become educators. And I always get this phrase. People are like, if you're such a great trader, why do you teach? And I tell everybody, listen, we like to give back a little bit. This is like, the market was good to us. And we just hate people losing money. But like, how did you get started and get to where you are today?
Going way back, I mean, I was always into sports growing up, played a lot of sports. I always thought I was going to end up doing something in sports. And then going through school, one summer, I used to always, try to get a summer job. And one summer I had a difficult time getting a summer job. So I actually went to a temp agency, and they assigned me to one of the biggest brokerage firms back then in the filing room. I was literally alphabetizing files. That's all I was doing all day. It was the worst job ever. But I was on the same floor as the trader. So on the other side of the floor, there's this big glass wall. And on the other side of that were all the traders. It really looked like a scene out of Wall Street, right? The movie. They were all there with their phones and yelling across the floor and so on. And I found it fascinating back then. I think it was 19, 20, something like that. And so that was really when I got interested in it. And then I started reading books, watching movies, and so on. And then when I graduated, I applied to some of the banks, was hired, the most entry-level position possible. Literally, I was spending my whole days on the phone just giving out quotes. Clients would call and ask for a quote, and that'd be it. If they wanted to trade, I'd pass them on, etc. And then, I did the necessary courses to get licensed, and it went from there. So I spent, I left the corporate world, the banks, in 2004. That's when I went on my own. I had enough. I had a real good run.
That's a long time.
It is a long time. I mean, I remember when I got licensed.
16 years.
Yeah, when I got licensed, I was told, hey, listen, the average career span of a trader is about 5 years because they get burnt out, stressed out, etc.
A lot of stress.
Yeah. So it was a good run. But in 2004, I went out on my own, and then, just trading for myself from home. And in 2013, I met a couple of friends who had an idea to start Trading Wins. And so that's when Trading Wins kicked off. And so we're approaching what, our 12th anniversary now.
Wow,
Yeah.
that's really nice. That's really
Yeah.
nice.
Yeah.
So what market you been trading? What's been your expertise?
I trade mostly equity options
Okay.
on a daily time frame. That's what I do most. I actually started out, which was a mistake for me, uh, day trading, um, before I ever really invested or did anything, and didn't work out too. I wasn't horrible, but what I realized for me is I needed to learn things at a slower pace and then move into a faster pace. Instead, I,
Mhm.
I went right into trading the S&P minis on a 5-minute time frame, and was a bit overwhelmed initially. And this had nothing to do with what I did at the bank. This was just my own personal thing, but that evolved. And once I found my sweet spot with the strategy I like to use on a daily time frame with equity options. It's just worked really well for me, and I just kept that on. Yeah.
So is that how you became like, that's what I try to teach the traders in here. There's so many people in here that they always want to experiment. They like, I don't know, maybe I want to day trade because I'm a day trader. And people are
Yeah,
like, well,
that's right.
I want to swing trade or I want to options trade. And I always try to tell everyone, you got to try a little bit of everybody's stuff. So how did you find your style that worked best for you? Because I think that's what people don't realize. Was it because you finally found the right mentor that explained it to you? Was it like, well, what got you into understanding to find your style? Because I think that's what a lot of the people listening in have an issue.
Yeah, if I can take an extra minute and go way back to when I started at the bank, I'll tell you exactly how I got into this, and it had nothing to do with technical analysis or training. It had a lot more to do with investing, with fundamentals. So I used to spend hours every day looking through financial reports, trying to find that undervalued company, right? And so anyone who's listening, who knows me, knows this story. So bear with me for a second. But um, I had found this oil company that was trading at around $2 or a little less, and I started buying some. And everything I read on this company was just fantastic. So I kept buying more and buying more. And with every earnings announcement and every end of year financial report, they look better and better. So I kept pouring money in. It got to the point where I had, a sizable position, 6 figures in that, which for me back then was a lot of money, was everything I had actually.
Right.
And I didn't realize it, but I was so inexperienced that I put everything into this one stock. And then one day, uh, several years later, it went from $2. It was trading at 14.50,
Wow.
and so I was doing really well with this, and I had a lot of money in it. I get into the office, and we had all the monitors with all the news and the ticker tapes and so on, and a wire came across with that symbol, and the news was that the CEO and the CFO, the chief financial officer, were both arrested for falsifying the books. So
Right.
this was pre-market. Stock gets halted, opens around 11 a.m. Eastern, reopens at 25 cents a share.
Oh.
Yeah, completely wiped out.
Oh
Completely
my
wiped out.
God.
Yeah, and it was everything I had at that time. So, the next couple weeks I went through, anger, sadness, really was embarrassed about it, realized the mistake I made, etc. But the main takeaway when I really looked back and thought what went wrong here is I was really putting everything I had into those financial statements, which were audited actually by the biggest accounting firm at the time, but yet couldn't rely on them. So then I thought that,
Enron, they do it all the time. You can't
yeah,
trust them.
right. So then I thought, what do I do now? And that's how I got started into technical analysis, right? And then I just went all in on technical analysis and, read everything I could, watched every video I could, bought courses, did whatever, spent thousands of hours reviewing charts. I used to actually review over 3,000 charts a night. I wanted to train my eyes on seeing those patterns and so on. And that's what led me to actually leaving the bank and doing this on my own. And over the years, my strategies went from having a screen full of indicators, right, and to then slowly paring one off at a time and realizing that not only wasn't it impacting my accuracy or my performance, but it was making me more active, because with fewer indicators, you get
You,
more
you
more
think
training
less, you
opportunities, right?
react.
Yeah,
Yep. I do it all.
it's
I
just
tell you that.
cleaner. Yeah, it's easier to see. It's cleaner. There's more opportunities, and it really doesn't affect the accuracy much. So now it's come to the point where I trade with one indicator only on my chart. That's it, and it's a 20-period simple moving average, nothing else, right? And
Vince,
so
it's fun.
yeah,
It's funny you bring that up, but like your story is like almost everybody's here. See, I always try to explain one. We never talk about the winners. We don't care about winners.
right,
It's the losers that makes us stronger, and
exactly,
we learn from the strongest. I know everybody here has been there and has done that before.
right,
In your case, you were able to say, you know what, you could come back from it, and you did it. And
yeah,
I condemn you for that. I really appreciate what you've done. I've been there too. We all have these great war stories. And the people here, like, there are people that make these mistakes, and they have to
yeah,
understand the same thing, that even a great trader like you been around, and that's a pretty huge hit right there.
yeah,
And yeah, probably 100,000, like probably having a million today, if you're
yeah,
talking back 30, 40 years ago,
exactly,
you know, but yeah, and I guess the lesson you people learn is don't put all your eggs in one basket, because
yeah,
listen, I've seen people that blew me away, make so much more money than me, and at the end of
right,
the day, Vince, you all know the story. They got lucky, right?
yeah,
They got lucky, and they got out, at the right time. The game stops and everything else.
that's right,
But it's
that's right,
not about getting lucky. You want to be skilled here. You want to make it slow and steady. You want to be consistent, because to survive all the catastrophes, like, the crash of 87, the
that's right,
internet bubble, the financial
yeah,
crisis, COVID,
right.
that's why we're here.
Exactly. And looking back, that loss was the best thing that could have happened to me. I mean, at the time, it was the worst thing that I went through. It was really painful in many ways, financially, emotionally, psychologically, all of that. But that loss is what really made me the trader I am today,
Uh-huh.
because I went on this mission to never take that kind of loss again. Right.
Right.
And so now I have a very strict set of money management rules where I don't really cap my upside, but I do cap my risk as much as possible. I'm one of the most, I think, conservative traders out there. I hate risk. I'll do anything to avoid risk, and it's all because of that loss, right?
You're like me. You're exactly
So
like me.
yeah,
Some people said you got to take a risk. I'm like, I'm not that type of a trader,
yeah,
like I'm
right,
not that $1 million trader that people do. They get lucky. But like I've seen people, Vince, like I said, that they done great. And they're not here anymore. Like I worked with some traders you know, that you will buy, like, I remember Rampus, stuff like that. They would have like 10, 20,000 shares of a $300-$400 stock. I'm like, I
yeah,
can't afford that.
no,
But now I had him like a couple of years ago, putting a new roof on my house. You know what I
yeah,
mean? Like, whatever happened to you?
exactly,
So,
exactly,
getting to that,
yeah,
you've been teaching that, and then you got into the education part. So you train so many people, Vince.
mhm.
And I know people love what you do. You got a great reputation. What did you find that's been the biggest mistake that traders are making today that you've been trading? Is it the same thing like what you've been talking about, or is it something else?
No, it's, well, overall, the over the years, and I have, like you said, taught thousands, and the one common thing that I realized is, you know how people say, well, don't bring your emotions into trading, right?
Right.
But it's easier said than done. We're human. We have emotions. We're going to bring them in. So the one thing I always tell my students is to not focus on money. Especially when people get started, they're usually starting with a small amount, right?
Right.
So A, they're worried about losing it, but B, they get really excited when they hit a good trade and see the potential that's there. But
Hmm.
your focus should not be on how much money you can make. Your focus should be on process, right? Can I follow my
Consistency.
rules? Yeah. And so, you come up with a trading plan, a set of rules. Your job as the trader is to follow those rules. Now, if you're following them 100% and you're taking more losses than you are wins, then you got to go back to the drawing board and figure out what's wrong with your plan. But if you can figure out a plan that gives you a slight edge, um, and you can follow those rules, the money will come on its own. And
Mhm.
the more you get hung up in, how much money I made on this trade or made on that trade, that's where your ego comes in. That's where, your emotions get the best of you and actually impact how long you stay in a position or how early you get out. And that's where the mistakes are. If you focus on the process, I always say to my students, trading should be boring. You're just repeating the same thing day in and day out, but it's not boring when you're seeing the money coming in, right?
It's
So
all about consistency. Listen,
exactly,
people like when you look at it, like I always tell everyone, it's like a job, right? It's a salary. And I
yeah,
always tell them like, okay, the salary pays $100,000 a year. And that's you got to work for a whole year. So what are
exactly,
you averaging a day? You're only averaging maybe $300 a day where you're working at a place, and you'd be
right,
like, so when like you said, trading is boring. Like, oh, I've been doing this for a month. I only made like 10 grand. I'm like,
yeah,
well, if you took a salary for 100,000, what do you think you're doing? The difference
that's right,
between this is that you're not working from 9 to 5 or whatever.
exactly,
I mean, you're probably working an hour and a half a day, and
yeah.
that's where it probably gets a little boring and so on.
And
But
you said like a lot of people focus on having these big wins because they like to talk about it. It
yeah,
makes them feel good and so on.
I
But
hate that.
hitting those base hits is what matters.
Right.
And another thing I always say is think of it from the standpoint of walking into a casino, right? I mean, I'm sure you or many others have experienced that. I've walked into a casino, played a game, whether it was just for fun on a Friday night or whether they're trying to make a living out of it. Regardless of what table game you're playing or even a slot machine, at some point, I'm sure you were up at some point, right?
Mhm.
Whether it was a small amount or not, you were ahead, but you didn't walk away, right? If you sat down and got ahead, even if it was $5, you walk away, right? Go to a different machine. You get up a little, you walk away, right? Think of what the casinos try to do. They try to get you to sit there and gamble for long periods of time.
Right.
Why? Because that's their edge. They know they're going to get your money over the long haul. If you
Right.
go in and take little pieces here and there, you can walk out a winner. And with trading, once you have a system that puts the odds in your favor, it's just a matter of time and let the system work its way out. But don't look for those huge wins and those huge wins, like GameStop and those kind of things that go flying and then they come back just as quick. That's what's going to destroy your psyche as a trader. That's what's going to really draw you into making mistakes, right? And that's the worst part.
Did you ever are you a fan of watching movies at all? Like any
Yeah,
trading movies?
yeah,
So it's funny, but, I did a video, talking about GameStop the second time around when I made that second run,
yes,
and I never saw the movie. I didn't know my sons would tell me, "Dad, you gotta watch the movie, watch the movie."
yeah,
Now, I'm a big fan of The Big Short. I think that was probably one of the
loved
best
it.
movies ever made because it
Yeah,
explained everything about the financial crisis. And
yeah,
sometimes you have to watch it like 2, 3 times. But when I was watching the GameStop movie, and this is why I tell everybody, I tell my students, all of you guys, I mean, it's just part of your education. I know everybody likes to read books and whatever, but watch these
yeah,
movies of like reality, Wall Street and stuff like that. The Wolf of Wall Street,
yeah,
like you want to know all those things. But those movies specifically showed you, like you just mentioned, or another good one. I'm a huge fan. Well, I was like one of the last Mohegans of BlackBerry.
oh,
BlackBerry made a movie. I don't know if you saw that one.
yes, I
And you
did.
saw, yeah, and you see other people like who cashed out on the stock, and then who, what the guys, the CEO's intention was, and was to
Yep,
make money on the stock, and that's why people do that.
sure.
They try to hit it big and blew it up. But I think if you watch those videos, you'll see who survives
Yep,
and who doesn't survive, who got cocky and greedy and the uneducated, and and the ones that were, like you said, like going to casino and just said, listen, I just want to make my money and just walk away
yeah,
and go from there.
yep.
So that's good. That's a great advice, and I'm glad that we're bringing at the same page. But getting on the positive side,
Yeah.
what was like, what was a good winner like for you? What
Oh,
made you at a good winner to learn from, that said, you know what, this is what I got to look for. Like the people that here are listening, like I always kind of teach them, like right now we're going into, I mean, you saw what's going on in California with the fires, right?
yep,
Which
yep,
is terrible. So I did a couple of videos regarding about what's going with the forest fighters and the fires. And, I'm not trying to say I'm benefiting from it, but like there was some good shorts, like the electric companies, EIX, all these stocks are getting crushed. You could short
yeah.
them, like, so what do you kind of recommend on some of your biggest winners that people have to look for as industries go?
Yeah, right now, it's hard to pinpoint one industry or one sector. I mean, there's the AI, and there's a lot of these pockets. I'm just not crazy about the market overall right now. I think it's in a
Yeah.
very sensitive spot. So,
It has been the past
yeah,
month to 2 months, right? Like, after the election, it was we had that good we got that
that's
good rally, but now, like you said, yeah, even like today, it's like it's got a good run, but the last couple of days were terrible.
exactly. And you see, the PPI report came out this morning, much lower than expected, and you think you'd get a bump, but we did, but not a huge bump. So, are people waiting for CPI tomorrow, or is this something different now? And have we actually topped out? That's what I'm really waiting to confirm. But my process is more slow and steady, like you say, and I'm looking for very, very strong trends, obvious trends, that have a lot of momentum behind them. To me, trading with a trend and momentum on your side is half the battle right there. That eliminates a ton of risk, and then I play those retracements back to the mean and a bounce from there. That's where I love to get in. So something like Apple back in the day, when Apple was really nothing for a long time, and then it started its climb. Throughout those years that it was climbing, it worked great. That was one of the highlights for me. Playing. I like to watch ETFs, and
Mhm.
more recently, I'm really getting into the leveraged ETFs.
Yeah, like,
Reason being,
ET well, the new ones that came out. What about, like, all the Bitcoin ones, like
yeah.
MXTX or, IBIT or any of those?
Exactly, yeah, BITO, we're playing, and uh, I love the leverage ones, for the simple reason that with our strategy, we really limit our downside. So with a leverage ETF, when it goes in your favor and it's a 3x, a leverage, yeah, it's great. You make 3 times the amount you otherwise would, but it works the same way. If you're taking a loss, it's 3 times the
3
loss, right?
times a
But
lot.
but the way we manage the trade, our losses are quite small without capping our upside. So those leverage funds work out pretty well. So, and there's so many more coming on now. You can even look at Tesla, for example, right? You don't have to play a stock that's $300 or $400 anymore. You can get a single stock leveraged
ETF.
ETF like that is trading for like $40.
I know.
So
How many
yeah,
ETFs does Tesla have? Like 5,
yeah,
6?
something like that. Yeah,
It's like,
exactly,
it's like
exactly.
so many of them,
Yeah,
like even NVIDIA. I mean, like, all of them have them,
that's
which is
right.
kinda crazy. I
That's
never
right.
realized, like, like, you remember back in the day, like, when I think of ETFs, I think of a basket of stocks,
Yeah,
right?
yeah,
And that's the only reason what ETF. Now they're doing ETF specifically on it's like almost like gambling, you know what I
yeah.
mean?
Oh,
Like, they're
100%. Yeah,
you know?
that's exactly what it
It's
is. Yep,
basically what it is. They came up with it. Hey, why we gotta do an ETF on a basket? Let's just do it on one stock, and we'll do that.
that's
Which
right.
I kind of,
Yeah,
I- which I don't like. You really think of the concept behind it,
of
but
course.
when
Yeah,
you're a trader, you just gotta know how to play the game,
yeah.
right?
That's it. You're looking for movement. That's
Well,
it.
well, why don't you show us, Vince? I want you to share your screen. Show us a little bit of that,
Sure.
of that style that you're talking about. Because I think the people who like to see visually,
Yeah,
what you're looking at and how you're doing that options trade on that ETF. That'd be awesome.
sure. Let me share my screen here, and let me see window. Yep, there we go. Let me know when you can see it.
Yep.
All
Your
right.
PowerPoint. There you
Yeah.
go.
So I just to show you, this method is what we call Victory 2.0. We actually started uh, Victory 1.0 just before the pandemic in 2019, late 2019. Now, this had nothing to do with the pandemic. At the time, I had no idea that was about to hit us. I just felt at that time that the markets were becoming more and more volatile.
Mhm.
And I think a good reason for that is a lot of those ETFs were coming on board. There's a lot more options activity. And so it just felt like a much more volatile environment. So I wanted something that would be more responsive than the system that I was using before, which was our our veracity method. And then over the years, we've added to it, and now in the middle of 2023, we came out with version 2.0. So I'd love to share that with the group. Here you can see my chart.
I actually
Hopefully.
you just text out of it. You were sharing your PowerPoint, not the actual screen.
Oh, let me try that again.
It says entire screen when you click on it.
How's that?
Yeah, there you go. Perfect.
Yeah. Okay. So what you're seeing on here is a chart of the Qs, the Nasdaq ETF on a monthly, and I'll go back and show you different time frames, etc. Let me know, Fausto, if you want to see any symbols, see how anything worked
Oh,
out.
I got a lot of them, but I want to see you
Okay.
first. Of it.
This blue line that you see, as I said earlier, is the 20 period simple moving average based on the close. That's all it is. I've used this my whole trading career as the one indicator that I love, and it's for a specific reason. It helps me read the amount of momentum there is behind a move. And the only thing that I use to judge that is the slope on the 20. So, to me, any sort of upward slope when you're looking at a longer downward slope when you're looking at shorting is fine. About a 45-degree angle visually, to me, is a significant, what I would call significant amount of momentum. And so when you get a move like this, or like this, it is extremely significant. So what I look for is a clean chart first and foremost. When I bring up a chart, I look for something clean, and I go back to like Zoom after the pandemic. It dropped back right during the pandemic. It went flying, completely retraced that move, as we see many times, and then we kind of went flat. So if you were watching this on a um, daily time frame, it was a complete mess, right, throughout this period. So if I'm looking at a chart and I see this kind of activity, I quickly turn to another chart, right?
Mm-hmm.
So that's the first thing I look for, and then I look for a clean trend. And higher highs, higher lows is a trend. I'm talking about pivots for those of you who may just be getting started. When a stock moves, if it's moving in an upward direction, you usually get a stair step formation. So these here are pivot lows, and these here are pivot highs, right? And so what we're looking for is a pattern of that. One pivot high being higher than the next, and one pivot low being higher than the previous one, and so that's what we're looking for. Generally, if you bring up a chart and you're looking at the bottom left to top right, that's a strong move. Now, typically I start with the monthly time frame. That's why I'm showing you this. And so I want to get an idea of what the trend is on the monthly, then the weekly, then the daily. And the reason why I say it is I like to trade, or I prefer to trade off the daily time frame. If you are more of a day trader, so you're trading off the 5-minute, let's say, the two higher time frames I would use are the 15-minute and the hourly. Those are the two. So I would start at the hourly, go to the 15-minute, drop down to the 5. Now, on this chart, you're seeing a bunch of symbols, right? Buys, sells, and these dots, either green or red. We don't see any red here, but there can be red dots. So this is the victory algorithm that comes together and issues a buy signal. Now, I'm going to go through what I look for in order for me to take a trade. We have a strict 8 checkpoint list that we follow, and if you can't tick off all 8 boxes, then you shouldn't be taking the trade. I'll go through a few of those points here.
I like the checklist. That's a good idea.
Yeah. So I ask my traders to keep that list in front of them at all times. It could be a sticky note on your laptop or a notebook in front of you. And you want to make sure you're covering all 8 characteristics that we're looking for. Eventually, it'll be memorized. It'll be like, second nature, and you won't have to follow a list anymore. But at the beginning, you should.
Yeah,
And
we
what?
have the same thing. We call it. We actually call it. It's called a tradable and non-tradable checklist too.
Yeah,
So it's pretty funny. But like everyone, if some of my students here probably know, but you sound exactly because we come from the same school,
right.
and exactly like me. We always gotta. We never count how much money we make. Everybody, we kind of count how much we could lose, and
Yeah.
the winners take care of themselves. The losers we got to worry about, and that checklist is very, very important. So,
Absolutely, and just as important is tracking those trades, right?
mhm.
So
Journaling.
I ask my traders to annotate their charts, mark on here the reason why you're buying, when you're buying, etc., and take a snapshot of it. Have a folder in there, and keep it in I keep it in a folder called open trades. And as that move progresses, if I'm making adjustments or scaling out of it, etc., I make those notes on the chart, take another snapshot, and put it in there. And then when I close that trade, I mark it up with the reasons why I closed it, and then I move it to a folder called close trades. And then, at the end of the month, end of the year, you go back, you look at all those snapshots in the close trade folder, and you don't no longer have to go by memory. You'll know exactly why you did what you did along the way, and you can easily say, hey, that's where I went wrong, or that is what I'm consistently doing right and should do more of, etc. So it's super helpful. But what we're trying to do here is trade with the trend and momentum on our side while limiting our downside. So these colors, you'll notice that when we go green, you get a buy signal. They, we don't intend to take every single symbol. Some qualify depending on that eight point list. Some do not. But if you're in a trade, whenever you see a change in color, whether it goes from green to red, or there's an exit flag, you want to exit the full trade. But what you'll notice here is that when trades don't work out, for example, this dot, what the dots mean are what we call reentries. It's the same algorithm that has come together to issue a buy, but since we're already in a buy,
Mm-hmm.
it just marks it as a dot. So the original buy was down here. Then the same criteria came together again here. So if you miss this, you can now buy it here. Or if you're a little more aggressive, you can buy here, then add to it here, add to it here, and here, and here. And then, once it changes color, you're out of the full position. Okay. We also have areas where we like to scale out, and we teach that as well. But if you ever see a yellow bar, that means you should not be long or short in that position. But the one thing I wanted to show you is that, for example, back here, this little green buy right here, you see how it quickly fails. The system or the algorithm is very quick to get you out when it does not go your way. Now, yes, we're all susceptible to gaps. There could be the possibility that you get a gap against you and it becomes a bigger loss. But we use our money management rules to limit how much we put in each trade so that we're still covered should that happen, even though it's rare. But in most cases, you're either going to get stopped out very quickly for a very small loss, or you're going to catch a nice run. And even out of sheer luck, you can catch a run like this that can make your month or your year. The important thing is to limit the losses, right? So that's what we do. So what we look for is, number one, a victory signal, whether it's a buy or a reentry. Secondly, I want that bar to be close to the 20 MA. When price pulls away from the 20, there's a higher chance it's going to snap back. So last thing I want to do is buy away from it and get caught in that snapback. If it turns on me immediately here, it's going to be a small loss. But if I'm buying up here and exiting down here, now it's no longer small. And that's what I want to avoid.
Mm-hmm.
And then, of course, we look at the bar itself. Where is the close on that bar? Is it the top half of the bar, the bottom half, etc.? And then we want to wait to make sure the high of that bar gets taken out. one tick, 1 penny above that bar, it's proving to us that it is going to continue moving in that direction. And that's when we jump in. We also look at things like support and resistance. So we always prefer these buys when they're near or at an all-time high, meaning you look to your left and you're going to see nothing but blank space, right? No prior activity. So we have a clean road ahead. That is very, very important. The other thing also is to have some support behind you in case it does turn around on you. These ribbons that you see down here, these always default to the 2 higher time frames. So again, if I'm on a daily chart, then what I'm going to see is the weekly and the monthly here. What these tell me is the color of the victory indicator on those higher time frames. So if I'm looking to trade long here, a new buy signal, I look down here. If they're both green, then yes, I have the green light to take that trade. If, for example, here I get a short, but these are green, then no, I cannot do that. I need all 3 time frames aligned. So not only do we want to be trading with the trend, we want to be trading, we want the same trend on the lower time frame, the medium term time frame, and the higher time frame. That really puts the odds in our favor. So in a nutshell, that's what we try to do on a day-to-day basis.
Now you're looking at, this is a really long-term chart. Am I right? On QQQs?
This is the daily chart now. I was on the monthly. This is the
there's
daily.
a daily.
Yeah.
Okay. And
Yeah.
what stock? Look at the QQQs?
Yes.
Okay. Now let's look at, you know what? There's a lot of people here that always like the fabulous sevens. So,
Sure.
you know, obviously there's a couple of good stocks moving this morning, but they were also backing off. So maybe you could kind of just relate it to a little bit. Like,
Sure.
let's start off with NVIDIA. Everyone talks about NVIDIA.
Yeah.
NVIDIA. So it hasn't really gone anywhere in the course of the year. It's trending down. But how would you interpret, you know, if someone was on NVIDIA right now, should I hold it? Should I get out of it? What do you see here that they're not seeing?
Right. So first of all, these markings that you see, all these orange and yellow lines, these are what we do with our members on a weekly basis. Like I said before, we meet 3 times a week, Mondays, Wednesdays, and Fridays for at least an hour each. And we mark up these charts, and I always leave them so when we go back to them, we remember what we were talking about. At the time, we were looking at this wedge and a breakout here on NVIDIA. But
Okay.
then we were looking at a potential head and shoulders. This was the neckline. We were looking for it to break. It actually did, but it never took out that low. So it wasn't valid. Came back, took out this high. So that disqualified it. Now, this past week or so, we've been seeing another drawdown on NVIDIA. But overall, what I see, when you look at going back to mid-October to today, it's really been sideways.
Yeah, sideways.
Right? There hasn't
Yeah.
been much happening at all. And so, you know, one of the things that I said before, we look for trend and momentum. So any trade symbols that we get here, buy, sells, whatever, if we have a flat 20 MA, we avoid those, right? That means
Okay.
there's no
Is that
momentum.
what you're seeing right now?
Yeah, that's what we're seeing right now. No
Okay.
momentum. So if we take out these lows, you know, yes, we're more likely to go lower than higher. And we can use these lines as targets or prior low pivots as targets on the way. But it is going to be a while before we would ever say we're going to short NVIDIA. You look at the higher time frames, the weekly, the monthly, they're still green, right? So they're still above the 20. The weekly actually is now breaking it. The reason why this is still green is that this bar has not closed, right? So this could change by the end of the week. But the monthly is still well above the 20. So it would be a while before we short. But if you're more aggressive, you know, you could, there's changes to the rules that we give you if you're going to be more aggressive, or if you switch time frames, right? So if you go down to the 5-minute on NVIDIA, you know, look at what we're seeing now. We're seeing a very strong slope downward on the 20, right? We're seeing a sharp decline followed by an attempt to retrace to the mean here. Didn't even get there. Didn't even get to the series of lows here. So that tells you there's even more selling pressure here.
What number is that?
The lows, you mean?
Yeah, those lows that you're looking back.
Yeah, just around 131
Yeah,
here.
131. That's what I'm
Yeah,
looking at myself. Yeah.
yeah, yeah. And now, so if we take out this low here from what was it, 11 a.m., the low was 130.33. You can even round it to 130. Below there, we should see more downside. And then, we can go to the 15-minute to see where we're at. But, those ribbons down here already were telling us that they were red. So, and again, you can see there's another critical low back in here around the same area. So if we break that, we're likely to continue going lower. Let's look at the 30-minute. So look at that trend, right? We're clearly pulling back on the lower time frames on Nvidia, and actually the market's given up its gains from this morning. So we're red now, pretty much
Yeah,
across
we're
the
like,
board.
yeah, we're red. I see, like, I look at the right of the chart. You
Uh-huh.
remember, like, I trade on an institution machine right here,
Yep.
and on the Nasdaq book viewer, like, I'm seeing there's like an 870,000 share buyer
Mm.
at 130 right now,
Yep.
and he's been out there forever.
Yep.
And like I said, I don't remember how much he hit there before, but if that breaks at 130, I mean, from what you could see here, because
Yeah.
by the way, everyone, people listening, this applies to every stock.
Yep.
Okay, we're just looking at exactly the same. But um, due to your analysis, what you see right now, do you think it's a buy at 130 and seeing the trend, or you think it's going to start breaking down? Because this is what I'm seeing, and this is what kind of changed my perspective of it.
Mhm.
The quantum stock's been doing great. They took off, QBTS, Rigetti,
Yes.
what else? A couple of other them out there that we traded. IONQ, all of
Yep.
them.
Mhm.
They got destroyed because the CEO of NVIDIA just said, these companies are 10 years,
Exactly.
away from going anywhere, and they got
Right.
destroyed.
That's right.
I don't know if it's affecting NVIDIA stock too. And I
Yep.
know everyone has in their portfolio, but from what you could see, do you think it's going to hold, or you think it's going to probably break and sell?
I'd say initially there's a better chance it'll likely hold. You look at, this is the daily time frame, and I like to use the volume by price to judge support resistance as well. And there's
Okay.
still a block of volume here that should act as support.
Yeah, I see
Now,
that too. I see the
you
same
know,
thing.
lower than 112 or so, it starts to thin out. But here there's more. What I'm The one thing that I'm uncertain about, which is why I said at the start that we're in more of a gray zone with the market right now, um, is we have the CPI tomorrow. Got to see what happens with that. But then next Monday we have the inauguration. A new administration takes over, and I think we can expect volatility at least. Right now I think a lot of people are uncertain whether not necessarily whether they're going to follow through with what they said they will do, but how quickly they do that and what the impact will be. So there's some uncertainty out there, and the markets right now are not showing a lot of strength to me, and they're at key levels. Whether you're looking at the Dow futures or the S&P and so on, there's some pretty key lows. You see how here now on the Dow there is a bit of a gap in support, so we have some room to continue going lower. And so that's what I'm uncertain, and that's what I'm not sure about. Even the S&P gets a little thinner here, but to me, this is why I trade the way I do. When I look at Nvidia here, to me the odds are not in my favor of trading this either to the long side or to the short side. Now,
Right.
Fausto, what you do on a much shorter time frame, there are certainly opportunities there. As you noticed, when I look at the daily, we're below the 20 here. Our victory system is red, yet the weekly, monthly are still green. But when we looked at the 5-minute, the 15-minute, 30-minute, etc., they were all red, right? So
Mhm.
on those shorter time frames, you can grab those moves that are aligned across those time frames. But looking at it over a longer time period, this is where those time frames are mixed, so the odds are not in my favor of taking a trade one way or the other. So what I look for are some key levels. So by putting on the volume by price, that's where I would set an alert, say at 112. If it breaks that, then you know
You're gonna
my
give people heart attacks right
yeah,
now.
no,
And,
no.
you're right. I see it right there.
Right?
September, I
Yeah,
see October, I mean,
yeah,
July. I mean, a lot of support levels there. This
yeah.
is a very key number right here, 130. But yeah, I'm seeing the
Right,
same thing you're seeing.
right. And if it were to come back up here and take out the high, I mean, there's nothing stopping this. It is wide
Oh,
open,
150. Yeah, 150
right?
is like, it's like that's kryptonite, but that's
Yeah.
all-time highs right there.
Exactly. So for me, I know I'm sort of in between. It's got a long way to move either way, so it's not something I'm going to play anytime soon. But again, on the shorter time frames, you're going to have your opportunities. But what I'm looking for are areas like this in here, where at the time, you know, this was the all-time high prior to that,
120, right?
right?
Yeah, the 120.
Actually, this was around 95 or so.
Oh, 95. Yeah, it was 1,000.
Yeah,
Yeah,
right, that's right. There was the split, right?
it was just, yeah, 10 for one split.
Yeah, there's the split. The split happened closer up here. Yeah, that's right. That's right. So, you know, as it as we have a trend with momentum, you know, these pullbacks to the 20 and then the bounces, you know, you take out that prior high. And if it's an all-time high, you know, there's no resistance overhead and off it goes. And that's what we look to try to repeat over and over again on the daily time frame. And then, you know, using our money management rules, which really dictate the size of the trade, along with trading options, where, you know, you're not um, you know, when you look at the difference in capital that you would need to trade the shares versus the options, it's just a fraction of it. So that's how we control our risk without capping the upside, right?
Yeah,
That's
well,
basically what we do.
makes perfect sense. And I think that's where, like, I say the same thing, to be a good options trader, you got to know how to become a good day trader or swing trader, understand the stock, because
Yeah,
it's the movement of what you just showed that makes that option move,
yeah,
and I think people, and that's the only reason why I'm not a fan of people that come and talk about options. They kind of like, it's got a sexy story, people like they love the leverage and stuff like
yeah,
that. Brokerage firms make a killing on it. But
absolutely.
yeah, and like and I know as being traders, we understand the game. But some people here don't understand it. Other than they got influence of like, why go out and buy Nvidia and pay $130 when I can buy a one contract and pay 1,300, whatever it may be. But you got to know what the stock's doing first before you do it. And like you just mentioned,
Yeah,
why trade Nvidia? It's not going anywhere. You know what I mean? There's other stocks
correct.
that can be less risk, more reward. But I wanted to kind of point out, you
Yeah,
know, it applies to everything, and everyone knows Nvidia. It's like actually on my social networks, like my most, it's my most popular
for
video that
sure.
I made. It's got like over 1 million views, but just kind of show everybody you could do it on anything.
Yeah, and you know, another popular one has been Palantir, right?
Palantir,
Palantir
yeah, I
had a
own that one. I just sold it. I did
yeah,
really well with Palantir.
right.
Yeah,
And,
look
and you
for
know,
that one.
this is the point. I don't know what your reasoning was to sell it recently. Mine was a break below the 20, right? So, you know, when I look at the 20 as sort of, you know, which side of the market are you on? If there's a trend higher and you're above the 20, you're on the right side of the market. Below the 20, you're not. And so, you know, why even if you believe this is going to be a great stock for years to come and it's going to continue um, you know, increasing in value over the years, why sit through the down moves, right?
You can always
um
buy cheaper.
you know, while this is happening to Palantir, you can take that money and put it into another trade that is actually working for you, right?
Right, right,
Why
right.
are you giving those profits back and then trying to make them up again, right?
Yeah, right. That's
Take
exactly what
it
I
off,
tell.
put your money
Exactly.
to work where it's working for you, and then when Palantir rebounds, you get back in it,
To
right?
get back in, right? I'm a huge fan of Palantir. I think it's
Yeah,
going to probably be $100 stock, but there's no guarantee of it. But like you just said, why should I tie it into that when I shorted,
yeah,
EIX because of the fires are going in California, and you could see the stock, EIX went from,
right.
it was at like $80 and went all the way down to 55 in like 3 days. You know what I mean? Like, it's all about that. That's the difference. You got to go where the table's hot, right? Like, you want to
E-
bring it to a casino. You want to go
e-
where the table's hot. You want to sit there and just sit there and play blackjack all day. And I hate to compare it to casinos, but
Yeah,
but let's be honest. You like
Yeah,
everything's a gamble. You drink and drive, you're gambling. So you
that's
want to
right.
compare it to that. You don't want to sit there and not going anywhere. You want to go where the table's hot. You see the people on the crap table like, hey, they're cheering and whatever. The guy's hitting. You want to be
Exactly.
on the hot hand.
Yeah,
So
and going back to the mistakes a lot of traders make, a lot of them, they're trying to outguess the market. They're trying to figure out what's happening next. Over my almost 40 years in the market, I've never been able to do that. The one lesson I've learned more than anything is that I have no idea what's coming next. So rather than asking, why is something happening and trying to figure out what the market's going to do next, why not just ask what is happening? And right now, Nvidia is going lower. So why would you want to be long Nvidia, right? Go somewhere where
well,
it
the same
is
reason you just
going
said
up,
it.
right?
She just said it. Some people just like, let me wait. It's gonna go higher. But like we just said,
But
buy it later.
look,
Always buy
look at
cheaper.
look at the volume by price here. I mean, this thing could come all the way back down to 24. It could, right? How many times have we thought, oh, there's no way? I mean, think of the ARC funds, right? Remember Kathy Wood?
Oh
You know,
yeah,
I
I,
mean, I
I,
mean,
I actually met her
yep.
2 months ago.
You know,
She's a savvy girl, smart woman.
yeah, yeah, and I gave her a lot of credit for being transparent with her trades. Not a lot of people would do that,
Yeah, a lot of people don't do
right?
that.
And she was an all-star throughout this move. Then it pulled back. I mean, look, just once it reached the 20, if you had gotten out, sure, you're not getting out at the top, but you're still keeping a lot of those profits. And look what happened next, all the way back down. Up here on this pullback, I'm sure there are a lot of people saying, this is just temporary. It's going to come back, make higher highs, higher highs. I'm going to hold this for the next 5 years, only to see all their profits go away. And then you go through several years of just
Nothing.
building a base. So it's dead money. And
Right.
now it's starting to pick up again. So now it's retesting those highs from that consolidation period. If it bounces here and takes out the high here near 63 up here, I think that could
Yeah.
really rebound. So
Yeah.
that's a level I'm watching, right?
Mhm.
But the whole point of you trying to, having an opinion is fine, but you making a decision on where you think something is going, um, it it's impossible to know where it's going. There's so many different moving parts to this, right? There's what's the overall market doing, what is the Fed doing, all these things. There's no way we can, um, you know, monitor all those things and figure out definitively. Yes, I think ARC is going to be, an $80 stock by May of
Mhm.
2025. So there's no way. So
There's no way, yeah.
just watch
Anything
the
can
chart.
happen. Listen, you had that same example when you first started. You
Mhm.
went all in. You learned from a valuable lesson. You bought that oil company. You were
Exactly.
making a killing.
Yep.
And all of a sudden, like,
Yep.
who knew the CEO was going to do what he did, and all of a sudden, just blew up your account and stuff like that. And I think
Yeah.
that's where you learn. And you know what?
Yeah.
That's where I kind of want to leave it off. With all your experiences, been around for over 40 years doing
Yep.
this, what could
Yep.
you leave and let everybody know that would be very valuable to kind of like to build their career or starting out in trading?
Don't focus on the holy grail. There isn't one. One doesn't exist. That's another regret I have is I spent many years not trading, trying to come up with the perfect system, and I wasted time and gave up making a lot of money during that period. All you need is a slight edge, right? I traded with an individual uh, that had a 38% win rate, right? But he made millions.
Mhm.
Why? Because his losses were extremely small.
Right.
The 38% of the trades that did move in his favor made him way more than the losses
Right.
uh, cost him.
Makes
So,
sense.
you don't need a huge win rate. You just need a slight edge in the market. And trading with trend, trading with momentum, trading with a proven system, right? Fausto, you've been, I'm sure, using a similar system for many years. Why? Because it works, right?
Right.
And
Right.
that's what you're teaching. And
Right.
so, all they need is a slight edge, and then follow those rules and repeat it. These days, there's so many indicators out there. There's so many things we have access to. It's frankly overwhelming for
It
me
is.
anyway.
It is.
So
I'm not a fan of them
yeah,
because what happens, they're laggers and everybody's trying to sell you another indicator. And you just say it yourself, you
yeah,
had all these and now you're down to one that really worked for you. Like I always tell everyone, you should try a little bit of everyone's stuff, see what you like, what's your style. Listen, some
yeah.
people like blondes, some people like brunettes, some people like Ferraris, some people like Porsches. You know what I mean?
That's
But
right.
we all like cars. We all like, whatever. It just, you got to kind of like fit what is your style. Some people can only trade in the morning, some people overseas, but you got it. Once you've learned how to simplify things,
Right.
that's when things are going. And like you said, you said better than that. It's funny. You said the guy became millions and he had only 37%
Yeah,
ratio. You're like, what's 37%? I'm like, should you be at 70? I'm like,
yeah.
no,
Right.
because it's all about keeping your losers small and you're working on your gainers.
Yeah, I can't tell you. I mean, I'm sure you've received them too. I can't tell you how many emails over the years I've received after doing an event like this or so, and they're offering, a course or something. And the first question is, what's your win rate? Right?
Yeah,
It's nothing to do with that. It
I
really
hate
has
that.
nothing to do with that.
I hate that. I tell the person, first of all, when someone ever tells me that, I'm telling everybody online, don't even join my trading room.
Right.
Okay. I tell them, don't count my money. Okay. What you have to do is you got to know if I teach you how to do it. You want to see this as trade, you come in the trading room, you'll see it.
Exactly.
Because I can spend another hour with you, Vince, just on
Yeah.
the BS that I hear from people that put fictitious,
Yep.
fake trades and, buying on one account, selling on another, and they use those. Listen. I don't even want to go there. But
Exactly.
I always tell everybody like you, the reason why you're here, Vince, and this is why I want everybody else to know, you've been doing it for 40 years. If we're still
Yeah.
here doing it for 40 years, well, I'll be doing something right. If you got a
Exactly.
reputation on Google and it's still there and you got that 5-star, you're obviously doing something right.
Yeah.
And that's where it comes from.
And we had plenty of reasons to quit. Right. That one loss I had should have been the end of me. Instead, it was the best thing that ever happened to me.
Yeah. Yeah.
It's those lessons that really pay off. So whether you've taken a loss in the past or so on, just focus on. That's what we try to do, is save everyone time. There's just, so many videos and books out there that you can read on this stuff, but we try to narrow it in and have you focus on the things that matter.
Yeah.
And really, it's just the basics that have always been around, right? Um, Trend, momentum, support, resistance. Just the basics of technical analysis are enough for you to make a living at this. They really are. You just have to, find your sweet spot and go with it.
And by the way, if anybody wants to learn more about Vince and his style and join his trading room, he's got a great promo right there. There's the link right there. tradingwins.com/start. Just click on that link, join him. He's got a great promo, cheap $7 1 month in this program. See how it is. Worst thing could happen to you. I always tell everybody, you learn something. That's the worst thing could happen.
Exactly. I mean, with that, you're going to have access to about 30 hours of videos that we've recorded over the years on various topics. So at the very least, you'll learn something from that. You get to join us 3 times a week on Zoom Live. We open our cameras, we go through charts. The main thing there is to answer your questions. Any
Right.
trading related question, come on, ask, and go from there. And we also send out nightly emails with trade ideas, but I'll be very clear. We do not run an alert service. I'm not telling
I
you
don't do
what
the
to
same
buy
thing.
and sell.
Good. Good to hear.
These are the trades that I'm looking at to reinforce what I do and how I do it. That's all. So you can look over my shoulder, follow along, and again, hopefully you find the one thing that'll really make a difference for you.
Vince, very well said. Thanks for being here. Thanks for taking the time, talking to everyone out here. Everyone, just let you know, we will have this recorded as usual. We'll have some good highlights for everybody. Just make sure you subscribe to the channel, like us, friend us, share us. And like I said, if you have any comments of any of the videos that we have, put it there. We answer everyone back. Vince, once again, enjoy 2025. Can't wait to have you back again. And look forward to everyone. Just like I said, just be very patient.
Yeah.
And, look, listen, and learn.
It was great. It was great to see you again, Fausto. Thank you very much. Really appreciate it. And yeah, all the best to you for 2020.